So what stood out to you from the earnings yesterday?
Yeah, so I think there's a couple of themes you can get from the earnings. I think the positive theme was that the server CPU demand looks quite strong. This is a point that management, I think, emphasized a few times. They've also referenced the fact that we're seeing more and more impact from AI making its way, and part of the agentic AI story is also driving much stronger server CPU demand. So I think that on a macro level was positive. However, I think as you pointed out, the guidance on revenue was disappointing, and also the data center also looked to be down sequentially when in fact the demand is strong and are sold out. So I think it raises a question about their execution, especially in their own production, that's not quite catching up. Now, they do expect capacity constraints should start to ease by the end of the first quarter, but I think again it goes back to the question of an execution issue in light of the fact that the demand is quite strong for them.
Remind us of the context here around these capacity constraints because we hear supply chain issues ebbing and flowing. Sometimes they're more of an issue when they're not. Where are we in that story, and how much confidence do you have that it actually will improve the way that the company says?
Yeah, so I think there's a couple of things that are impacting the overall supply side. One is Intel's own ability to produce the chips through their own fabs, and secondly, on a component level, there's going to be some issues as well, especially on the memory side, especially on an upstream raw material called ABFs. And so I think there's some uncertainty in terms of how much of it is their own issue and how much of it is just the component bottleneck from outside parties will be an impact going forward.
Tell me a little bit about how much demand there is from Intel's chips for Intel's chips broadly in this post NVIDIA world. The company has been through certainly a roller coaster of sorts, but uh, how much demand is there for Intel's technology today?
Yeah, so I think if you look at the server CPU side, a good reference point would be that ever since the AI story started taking off a couple of years ago, the overall server CPU demand has generally been flat. We haven't seen any growth. As we know, the first year of AI, the CSPs were really focusing on AI investment and prioritizing that over the regular server side. But this year, so what we're starting to see from the supply chain is that we could see something close to a 30 to 40% year-on-year growth. But because of supply side issues, perhaps we're going to see a lower growth, but still probably somewhere around 15 to 20% for the overall industry. So if you compare it to what we've seen over the last 2 years, it's basically flat growth. This is a really strong number. So I guess the question now is that demand is there, but can Intel actually take advantage of that?
And what do you think about the valuation broadly? We wrote a column this week at the Information looking at the valuations for Intel and then for TSMC, and we were looking at it on a multiples basis. And based on certain multiples, and I should say, we published this before the earnings, so might have changed slightly based on how the results went. But if you look at some multiples, I mean, Intel earlier this week was trading higher than TSMC on some measures. Now,
Yeah.
what do you think of that? What do you make of the valuation broadly?
Yeah, I mean that's a good question. I mean, I think the thing with Intel is that it's not a simple story now because you have besides the core chip business, you have this geopolitical aspect of trying to be an independent foundry and trying to compete with TSMC at some point. And this has been one of the areas we've been less confident on. And I think one of the reasons shares have reacted as negatively as it has been is that beyond just the fact that they're not able to, they still have capacity constraints. It's the foundry outlook, the independent foundry outlook. I think the market's gotten a little bit bullish about, more customer engagements, which we acknowledge, but customer engagements don't mean actual orders yet. They don't mean actual revenues. So I think the market got a little ahead of itself, thinking that, given its position, given the US government owns Intel, that more and more customers are going to want to sign with Intel. We think the intent is there. The problem is like they need to deliver, which is still too early to tell these days. So in terms of going back to your valuation argument, it's definitely valid. I mean, if you look at TSMC, which is in a monopolistic position, it trades on a significantly lower multiple. But if you also take this conversation on a broader level, other AI semiconductor companies such as NVIDIA and Broadcom arguably trade also at lower multiples with higher certainties in terms of their earnings profile.
Last question for you. When we've seen some reporting and some headlines around Intel maybe potentially considering some acquisitions to bolster its business, maybe some investments. There's always a talk about, hey, is Intel a better company inside a broader business? Walk me through your calculus around what acquisitions you think Intel could make to really turbocharge its business. Or on the flip side, I mean, do you think it's better as part of a bigger company?
I think, the complexity of Intel is that ever since they've announced they wanted to get into the foundry business, it's been a very controversial move. Is it better for them to basically be asset light? I mean, this is what A&D has done the last couple of years by working exclusively with TSMC, and that's proven, looking back, to be a great strategy because that's when their market share gains on the server and PC started to climb. But at the same time, I think Intel is in a difficult position because it has to be kind of the national champion now, and now with the U.S. government involvement. So I think they're doing the right things as far as my view is, which is to focus on the core business, which what seems to be what they're doing. They're not going to fully invest on Intel 14A in the foundry business until they get more certainty about customers and orders. So I think they're doing the right things for the moment in order to improve their returns. But it's going to take time, and I think that's why the market gets a little ahead of itself, whenever they see a lot of headlines. But bottom line, they need to start delivering on earnings, which we haven't quite seen yet.
Great. Well, Frank, I want to thank you for coming on and chatting with us. That is Frank Lee from HSBC here on TITV.